Times are changing, and investors are going to think differently as we stay in a high interest rate environment. So, what we're talking about is choice renters and making the choice to invest before you buy your primary residence. I think these things are both going to be very, very popular in 2025, as there are people who have disposable income, are pre-approved and can buy a house. However, with limited inventory and prices skyrocketing because of that limited inventory, they may make the choice to rent locally where they live. Maybe it's an environment where you can get a lot more house for a rental price than you would if you were paying that same amount on a mortgage. And that's the important part because your home, whether you're renting or buying, should be full of enjoyment. So if you have to stretch to buy a home and it's not even something that you like, or it's going to leave you in trouble for a couple years, you may decide to rent. You'll be renting for way less, getting a better house in these high price point markets. And then what I think a lot of people are going to do, they're going to take some of that savings, not all of it, and instead of saving completely for that primary home, they're going to take it and make an investment in another piece of real estate, whether it be probably not in that area because that's a high priced area, but somewhere outside or possibly out of state, where you could be looking at turnkey investments, which are rent ready opportunities with management and tenants in place. Those can be great ways to build up small cash flow. It is going to be small, but it gets an asset in your portfolio before you get the primary residence. And it will still help you later on the DTI because it's bringing in income. So that's one option. I also think that for accredited investors, those that have a decent amount of money in the bank, they may be looking to go into real estate syndications as a limited partner. It's extremely passive, the most passive real estate investment out there. You really don't have any control. You spend all your time vetting the operator of that syndication. Then, secondarily, you're going to look at the asset, or you could be investing in types of funds that are similar to syndication, but in those, the operators have full discretion as to what they buy with them. I personally like the syndications that are a property because then I know I'm investing in one, the operator, and a specific property. So for me, that's been multifamily. And I think these are going to be smart options for what I call choice renters. Again, you may be pre-approved, you may have the money to buy, but the market just may be too hot or in some cases too dumb because it's just too excessive. And you may decide that renting is going to get you a better option and you want to invest elsewhere because you don't want to just leave it in the bank. Although index funds are great if you have the resources to leave it there and ride the waves as you go. There's all sorts of stock investments that can work. It depends on your risk tolerance. But if you in 2025 want to get into real estate and you wanted to do that house hack and the numbers aren't working, or you wanted to get your primary residence, but the numbers don't make sense, and you look at it and you're like, wait, for 3,000, I can rent something really nice, and $3,000 payment's going to get me nothing in my market. You may decide to make that rental, making good income, this assumes, so you have good jobs, that money coming in, and then you maybe decide to do this out of state investing, syndications. Maybe you get a short-term rental in the area, learn how to manage that, or you get something smaller, turn it into a midterm rental. So in 2025, I think we're going to be looking at a lot of choice renters who are going to also make the choice to invest outside of their primary residence before their primary residence. I'm Jonathan Green. You can follow my podcast, Zen and the Art of Real Estate Investing, at, of course, zenandtheartofrealestateinvesting.com. See ya.